the different types of life insurance. You have term life insurance. The two most famous ones that you will hear from, you could turn on the TV right now and see a commercial for term and for whole. Term, I'm finding that people do not know what term is. Term is exactly what it sounds like. It's temporary. You will not have it your entire life. You purchase term in 10 years, 15, 20, 30, they now have 40 years. When that 10, 15, 20 years is up, you don't have life insurance. There are term companies that will tell you your term is almost up. Do you want to go into another term? You're throwing money away. First of all, if you say yes and they put you in one, you're paying higher the premium because now you're older. The more you play with that term, the more money you throw away, and you're going to have to keep going. Because my thing is, if you know it does not last you your entire life, and I don't know if I have any Christians in the room, but we are so quick to say, Lord, keep me from illness, keep me healed. But then you buy a 10-year term. That's contradictory, because if you're telling him to keep you from all diseases, why are you buying a 10-year term like you betting for you to die in 10 years? The reason I find that people buy term is mainly for two reasons. One is because it comes across cheap and because you don't have to do the health exam. Now, when it seems too good to be true, sometimes you have to know that it is. There is no cash benefit with term. There is companies out there that will try to sell you term and tell you that you can also use an investment vehicle. Everybody's financial situation is different. If you have money to just put away like that, go for it. But if you want to be conscious of where your money's going and not be left 10, 15 years from now looking for permanent insurance because that term has ended and now you're older, because premiums increase every year you have a birthday. If you don't do the term, it's because you can afford permanent. The only reason I put my clients in term is because they absolutely, under no circumstance, can afford permanent. Otherwise, I don't want you out here walking naked without anything. The whole point is to have your family in a situation that they can, if something was to happen to you, they can grieve in peace instead of wondering how they're going to pay for your services. Another one is called group life insurance. And there may be some workers that work for companies in the room, and you were hired and they said, we're going to give you life insurance and it's 2 to 3 times your salary and you don't have to pay a thing for it. Sounded good. Y'all was happy. Wasn't even looking for insurance, because why do I have to pay if they giving it to me for free? Because the minute you leave that company, whether you quit or you get fired or you stay until you retire, you walk out the door, that insurance stays with them. You do not have insurance. So now you're older, hunting for insurance. And if you stayed until retirement, you're now in your 60s and going to pay a much higher premium. And who knows if your health will even qualify you. So if you have term and if you have group, I really wish you'll reach out and get a quote for permanent life insurance, because before it is too late. We don't know from day to day if something can happen, but if it does, at least you'll be covered. Then we go into, and by the way, your group life insurance doesn't have no cash benefit either. So you're not getting nothing out of it. And we also, this is a great time for me to bring up peasant insurance. your company can have insurance on your life and you wouldn't be getting anything out of it. They have insurance in case something happens to you, they get paid out a check. So why would a company get an insurance policy on you, but you guys can't get a policy on yourself? The next one is, now we're going into the great scenario, the permanent life insurance policies. We have whole life. Whole life is for the person who says, I want to make sure that my family doesn't worry. I just want to have a permanent policy. Whatever's remaining goes to my beneficiary. The death benefit never changes. Your monthly payment never changes. You have it until you're 100 years old. You are not promised to have any cash dividends on it, but there may be some cash accumulation, which, if there is, it's tax-free. You could take it out and do what you want with it. The next one is universal life. Universal life is for the person who don't know which way they're going. They can be 20 and say, I just want to make sure, I know getting insurance is the right thing to do, and I want to make sure I'm covered, but I'm at a point in my life, I don't have kids, I'm not married, I just want something. So they go, they get $100,000 policy. But now, 15 years later, they have kids, they get married, they have a house. So now they need more. They can increase from 100 to wherever they want. And then you have the person who may be 60, maybe had $1 million policy and says, the kids are out the house, I done sold the house, I don't need all this insurance. So they want to decrease down to 500,000. They have that flexibility. So whenever you hear universal, just think of, you can change it whatever way you want to go. So if you feel like you're paying too much a month, you can call the insurance company and say, I want to bring down my insurance. If you feel you ain't got enough, I want to bring up my insurance. And that is what universal does for you. Then we have index universal life. Now, index universal life is for the person that says, I look for investments and I want something that's more solid than the stock market. I want something that's more solid than going to put money on the lotto. I want something that's more solid than driving to Atlantic City and putting it on blackjack and roulette. I want a little bit more guarantee than that. Well, an index universal life gives you that, because with an index universal life, there is a guaranteed component that you are guaranteed, if it's 0.75% to make, if that index is in the negative. If you guys are in the markets and watch the stock markets during COVID, people lost money. The only people that did not lose money is that people that had money in life insurance and in IULs, because of the guarantee component. So I always say, for the person that's looking to feed an IUL correctly, that is a great investment tool. Why? Because you have the flexibility. With one company, they may give you a cap of 15%. So you have from that 0.75 to 15% of compound interest. That's cash. That's a money cow. The same way you go and charge something on your credit card for $100. If you only make the minimum payments, you have way past paid that $100. You have probably gave them $200 and $300 for that if you continue to make minimum. Why not take that same component and use it in the positive in your behalf? So if you have savings accounts, I can guarantee you, you're not getting more than 1%. You're getting point something in that savings account. You have $1 million sitting there. Where's the room for growth with your wealth? You're getting just that less than 1%. When if you put it in an IUL, you have that room and flexibility to make up to 15%, some companies 25%, some companies give it to you with no roof at all. So that million can be tripled, and the compound interest is amazing. I can't express it enough. When I do my one-on-ones with people, I show them how their number will double and at what point, at what year they'll have this much cash. So that is a benefit of IULs. The next one that you have is final expense. Final expense is for the person who says, I don't want to leave nobody nothing. I just want my services to be paid for. I hate everybody, ain't trying to leave them $1. So they can get a final expense policy and it'll pay for their services. That usually goes up. Different companies do different things, but typically between 30 and 40,000 you can get. That's the most. And that'll pay for your services, and whatever is left over will go to your beneficiary. So again, go back to term. Term is like renting instead of buying a house. So do you really want to put all that money? I tell my clients, it's like paying for term is like putting money in a bucket. And if you happen to see that bucket overflow, you have just outlived your policy. So we want to make sure that we don't do that. So you're aware, insurance companies today have improved. You can be insured up to between 80 and 85. Whole life insurance, you can get up to 80 years old. Index universal life, you can get up to 85. Whole will cover you to your 100. Index universal life, if fed correctly, can cover you up to 121 years old. So we need to make sure that we know what policy we're going into and that we get insured. And please, if you have children, please get policies on your children. First of all, it's teaching them about creating wealth, depending on the type of policy you get, but just teaching them responsibility. And then when they're 18 and get a job, it's my belief, tell them to take over the payments. It'll teach them responsibility.